A warm welcome to Global Financial Planners Summit 2025. What makes this summit truly unique? Number one, like I said, no stalls, no sponsors, just unadulterated knowledge sharing. We'll be starting the conversation on real estate with a part of a portfolio that's often the largest yet ignored, even excluded, in fact, in the ambit of financial planning, and that is real estate. And I think this is the perfect segue into our first segment, for which I'd like to invite on stage Keval Bhanushali, co-founder and CEO of One Finance, to open the conversation.
I welcome you all on behalf of One Finance, and I think as far as residential real estate concerns, or why are we talking about real estate, I think real estate is close to around 58% of the global allocation in terms of private wealth, right? Individual wealth. So I'll just open up the conversation with some numbers. The overall real estate market size in India is around 58 lakh crores. This number is projected to be 92 lakh crore by 2030. Now, to give you a perspective, the mutual fund industry is close to around 70 lakh crores, debt, equity, all of it put together. And please let us understand that we are never comparing an asset class to another or any other product, right? Because every asset class has its place in personal finance, and we always want to ensure that the right kind of asset allocation is done for our customers, right? So while we open this conversation about real estate, it is never going to be real estate versus equity, equity versus gold, gold versus mutual funds. No, we are not talking about it. What we are talking about is asset allocation. So Mubina, yes, moving on to the next segment.
And I'd like to invite Sanjay Dutt, MD and CEO, Tata Realty and Infrastructure Limited, and Senior Vice President at the National Real Estate Development Council, Maharashtra, and also Kamlesh Thakur, co-founder and MD of Shrishti Group and Vice President at Naredko, Maharashtra.
First of all, thank you so much for coming over and taking the time out. My first question to you would be, Sanjay, as in, how do you think the real estate piece aligning to the overall wealth planning or financial planning segment of the today's investor?
I understand your objective is to inspire people in the audience and the financial planners to consider the advisory role in real estate and motivate them, right? So I think there's nothing better than giving my own example to all of you. After doing my program in management, I realized that I should take up real estate back in '92. So I did the advisory of real estate. And during this journey, I realized that how difficult the sector was and how wrongly perceived the sector was. And if this country needed to make a progress, it has to do only with real estate. And the reason for that is, let's look at privatization of the airport. The underlying principle of privatization of airport is real estate. AeroCity in Delhi is real estate. The modernization of Mumbai airport or the Bangalore or other is underlying asset is real estate. If you look at hotels, hotel as a segment is doing very well. The underlying asset is real estate. So is hospitals. So are schools, so are institutes, warehousing, logistics. Today is a data center. The REIT market, which has opened in the commercial real estate, is basically institutionalization of commercial real estate, which has created opportunities for so many intermediaries and advisors. So I think it has played a very important role. And you already mentioned the data in terms of consulting. I think if you include project management, which is also an advisory in real estate, asset management, which is also an advisory in real estate.
Yeah.
Beside doing the private equity and debt structures and advisory in that space, you could be talking about double the fees that you quoted. Globally, if you put the top 5 consulting firms, they would be about $120 billion US just as fees.
No, that's
between
insane.
CBRE, Cushman, JLL, Colliers, Knight.
And they're mostly, I mean, they're all buyers side, right? I mean,
you know how many employees they all have put together in India right now? Over 1 lakh as employees between these firms across all segments. So, and India's story has not just started. Right. It's just at the cusp of the growth. So I think it's extremely important sector. The reason I'm so bullish about it, I'm so upbeat about it, that it has just become regulated.
Right.
And regulation of real estate means more transparency, more institutionalization. So more global capital is coming on. On an average, in a given financial year, 5 to 6 billion US dollar is chasing real estate investment in India, only by institutional capital. And you know, the valuations are so low right now, because the valuations you mentioned about housing, others. Yeah. In New York, the average residential house is really $2,000 per square feet. By the way, Mumbai is cheap. It's about $1 lakh.
Yeah, I think this is quite a big misnomer that we generally quote, that
Yeah.
Mumbai is very expensive, or rather the Indian market is very
It's
expensive.
not.
It's not. It's not. Like
It's
you talk
not.
about New York, you talk about Tokyo, you talk about a lot of
So
other
you go
countries.
to all financial capitals of the world, from Tokyo to Singapore, and now even Dubai, downtown Business Bay, etc., all the way to London and New York. Even though they are suffering in terms of real estate, they are still $2,000 US dollar per square feet. Right. So we still have about 70,000 US dollar to catch up in Bombay market. So and we are just $3 trillion. I mean, the moment we become $6 or $7 trillion, the game will be very different.
Absolutely. Just touching upon one point that you mentioned, REITs. That has been my personal favorite instrument for a very long time, and I think that REIT hasn't just yet begun. And we are seeing a lot of conversations around the GCCs and a lot of big players coming into it. That opens up door for a very big disruption, in my opinion, or my understanding. And today, when we are talking about a personal wealth breakup, it's standard across the world with more than $680 trillion of wealth. We are talking about a 58% allocation to real estate and close to around 9, 10, 12% in equities and all, right? The gap here, I would not say the sad part, because it's an opportunity. It's not a threat. There is less than 1/10 or maybe 1/20th the number of people advising on the largest asset class, versus if you see advisors in equities, equity is the poster boy of advisory business. I really want to understand, with REITs coming in at parallel with equities. Last month when in the new circular, the taxation part or the entire parity was brought down. Where do you see REITs playing in, or will there be a more structured approach to the commercial real estate part and the REITs part of it? Because the passive income is a very, very important asset class for investors, and also for mutual funds going further, because they want to offer multi-asset and other products. So real estate becomes a very crucial part of investment. Where do you see that? Maybe we can start, Kamlesh.
See, real estate, just to continue from where Sanjay ji was saying, the hall that we are sitting is a brilliant example of real estate. Facilities like this were not existing a decade back, and we had to rely on a handful of the 5-star hotels, and that's it. The fact that the creators of this facility see a value in it, and there are so many people who come and use these facilities, and now they want to be part of this success story. That's where the REIT comes. There is affordability part of it, but there is also an entry part of it. Many of the equity classes succeeded because you could enter and exit at drop of a hat quickly. You rightly mentioned real estate has beautiful advantage of being underlying asset, but that could be also disadvantage, because you can't enter and exit very quickly to monetize and to get that profit off the table if you are sitting on an alpha. REIT is an example where you can have the best of both the worlds. Coming to the residential REIT, we are still, I think Sanjay ji will agree, we are still not there yet because of the governance issues and the policies which are being still discovered or being framed. But commercial REIT, yes, we have. There are certain issues of entry and taxation while exiting these REITs. But I see once these things are ironed out, we have a huge, huge scope and potential that the investor who does not have option to buy the entire asset class can proportionately enter into the smaller segment by way of REITs and enjoy best of both the worlds.
Absolutely. I think REITs just kind of helps us overcome the biggest challenge of real estate, that is liquidity. right? Because you can't, like I said, now that was an advantage, that was also a disadvantage, but I think REITs helps us do that. We see a lot of players, coming in India, the wealth managers and developers now merging together. There are AIFs, there are funds, real estate funds. I think in some way the financial planners or the advisor community is already participating into real estate through these kind of funds, right? So do you think that this is a better way to get an HNI or an ultra HNI pool in their money and come in at a larger project, or do you think rather massy product like a REITs or a direct investment would be a better option? Sanjay, if you can throw some light on that.
I personally believe going through REIT for new investor starters is a better route. Because eventually, real estate is also very messy. There is a title due diligence, there is a technical due diligence, there's environment issues, there are, ownership encumbrances on the properties and assets, there are property taxes related issues. And I don't know whether you know, but the income tax department, for example, if there is arrears not paid for 11 years, if there is any claim, they can attach the property. So, you don't want to be in that business if you have a large exposure as an ultra HNI. So I would say go with a REIT. But if you are a very seasoned investor and where your portfolio is upwards of 2,000 crores, and because there are some ultra HNIs that I know who started 10 years ago and 20 years ago, they're already 2,300 crores plus investments, and I did a lot of advisory for them. They are very mature, and they have set up organizations to manage the risk and mitigating of the risk. So I think it's pretty solid. Just to support why this market is going to grow, we will reach 1.3 billion square feet of office in next 3 to 4 years. So we will add over 600 million square feet. And if you add warehousing, logistics, etc., on an average, every year we do 140 to 50 million square feet of leasing and construction of these assets. Right. It's there. So, and the moment the asset comes, the institutional investors and the REITs lap it up. So it's become fairly competitive. The yield has compressed from 10.5% that I sold asset at one point of time, and Kamlesh would vouch, is down to sub 8 cap already. And sometimes some of the assets can even come down to 7 cap. And you have a negative spread between cost of borrowing and actual yield, which is very unique in India, by the way. And globally, it's a positive spread. Right. So you can imagine how quality asset with least risk and institutional is just so attractive to investors because there is no development risk at all, and it's a steady flow of income.
Just to add to Sanjay ji, I want to also add, the best example of Bombay real estate is, Hiranandani projects. All of us are aware in Powai. But the people don't forget that it took them 20 years to build that entire township of 300 acres. Sanjay ji is building upward of 50 million square foot in next 3 years. So that's the kind of capacity built up which has happened in this decade. The scaling up of the operations. We see China में 6 महीने में building बन जाती है, 1 साल में बन जाती है, यहाँ 5-5 साल लगता है. Reasons are on the policy side, on the planning authority side. There is also the access to the capital. So these are both ways meeting. The two domains are intersecting, where the developers are upping their game by speeding up their construction, and the ease of availability of capital also helps them grow fast. And this is the objectivity of our government of becoming a Viksit Bharat, which they have been saying, $5 trillion economy and 8 trillion, all these numbers that we hear. Unless until we speed up, you don't have 30 years to make up all these things anymore. Look at some of the cities like Hyderabad. आप चले जाओ downtown में Gachibowli areas and all, the way they have transformed in 1 decade, it is phenomenal. And the kind of catchment they are getting, definitely there is a growth happening, and I think we have a huge positive possibility, infinite.
Very, very quickly, as one finance, you can actually play a huge role, because if you leverage debt to a certain extent and do tax planning, you can actually have almost interest-free, contribution to the asset that you may buy. You can actually offset your income If you can do that and make the customer more informed of how you can grow wealth through a smart tax planning and leverage the debt, you can actually grow much more than what you normally do in a conventional real estate asset class.
Absolutely, absolutely. I think that's the best closure for this conversation in terms of what exactly it means to be a holistic financial planner and not just an investment planner, because you can't really be talking about returns per se, right? That's only half truth, that's only half side of the story. You have to mix it along with the overall financial planning of your investors, and once you do that, वहीं पे आप justify भी कर लोगे अपना advisory fees, जो हम जनरली सोचते हैं ना इंडिया में लोग एडवाइजरी को फीस नहीं देते, ये गलत बात है. इंडिया इज नॉट अ प्राइस कॉन्शियस मार्केट, इंडिया इज अ वैल्यू कॉन्शियस मार्केट. आप उसको सोशल मीडिया से निकाला गया ज्ञान दोगे, कौन सा स्कीम में पैसा लगाना है, लास्ट 1, 3, 5 ईयर्स की स्कीम में पैसा लगा दो, जो कि अगले 3 साल के लिए तो डेफिनेटली टॉप 10 में नहीं है. We did that research at One Finance, and there was not even a single mutual fund scheme that has been able to stay in top 10 in the consecutive 3 years. And that's not just India, right? That's a global phenomenon, because that's the nature of a certain investment style. That doesn't make an investment bad. It's just that किसी का theme है value investing, तो एक cycle है. किसी का theme है contra investing, वो एक cycle है. किसी का theme है quant, वो एक cycle है, right? So the money has to be made across all asset class only if you are able to club them. And with that, I think we'll move on to the next segment.
All right, thank you very much, gentlemen.